Welcome to the Spokesman Speaks, a podcast for farmers and ag professionals by the Iowa Farm Bureau, bringing you the news, experts, and educational insights that matter most. Now, here's your host.
Welcome to our March 17th edition of the Spokesman Speaks podcast, and happy Agriculture Week to everyone who's listening in. I'm Andrew Wheeler, and today's episode features an ag economic outlook for the coming months, along with analysis of the global economy that looks even further into the future. We'll start with Iowa Farm Bureau economist Dr. Christopher Pudenz and Farmer Education Program Manager Zach Brummer, who recently wrapped up an Ag Market Outlook meeting series with stops in several locations across the state. Then we'll bring on Todd Thurman, an ag futurist with 25 years of hands-on international agriculture experience, to talk about what he sees as he thinks about the future of the global ag economy. Let's begin with Dr. Christopher Pudenz and Zach Brummer, who sat down with Spokesman editor Tom Block last week.
Zach and Christopher, there's a lot happening in commodity markets right now, and I know the two of you have been busy all winter long, really, with meetings. Last month, you took the show on the road for a series of Ag Market Outlook meetings for Farm Bureau members all across Iowa. What were the key messages from those meetings?
We got out in front of over 100 members there in February, and, we covered a lot of topics, everything from kind of the macro economy to farm succession planning to really diving into the corn and soybean outlooks, as well as cattle and hogs primarily. But, on the corn and soybeans, which is what I was kind of focused on, one of the big headlines for me is just the balance sheet specifically to corn and the retrace, you might say, by the USDA that took place over the fourth quarter of 2024 and into January of 2025. We lost roughly 500 million bushels of carryout from September to where we ended up in January. The February WASDE really didn't change any of those numbers. And then as we look ahead to the March WASDE, which we're looking for potentially on the corn side to see the USDA adjust some export numbers based on export strength that we've seen in the corn market. We're running about 8% ahead of what the USDA is currently projecting. So I would expect to see a little bit of a retracement there, further tightening that old crop specifically balance sheet as we head into planting here, and hopefully providing a little more strength price-wise as we move closer to planting season.
You said those meetings were very well attended. What kind of questions did you get from farmers at those meetings? What are the key issues on people's minds out there?
It was clear to me that a lot of folks have held grain longer than they would have really liked to last year in terms of old crop heading into harvest. And so I really kind of keyed in on that and just discuss, what kind of happened to us there in terms of folks needing to move that grain right before harvest and kind of really becoming price takers. And so a lot of folks questions, we had multiple topics, but specifically to the grain side, the questions more or less revolved around, at that point, we had some pretty significant January and February market strength. Folks were moving grain, both corn and soybeans, pretty aggressively with that fresh in their minds in terms of becoming price takers last year. And so as we look forward to any remaining old crop and starting to think about maybe getting ahead of some new crop sales, with those memories fresh in mind, folks have been pretty aggressive, specifically on that old crop piece. And so I'm happy to see that, specifically with what markets did there in the last 10 or so days of February. And as we got into March here, hopefully we can see this corn market continue to strengthen. We've had a few strong days bouncing off the bottom here, but, as we continue to get closer to planting, that April, May, June timeframe is another thing I really harped on in terms of the market doesn't like uncertainty, and it typically pays a risk premium. And so with the weather and situations around planting that we have every year, 16 out of the last 20 years or something, specifically on the corn market, that April, May, June timeframe has been an exceptional time to get sales on. So I'm telling folks to focus on that. And once you get past that June 15th window, you just run out of fuel in terms of new information that the market doesn't already know to continue to offer volatility, specifically price volatility to the upside most seasons. So by June 15th, I definitely would want to have most of my old crop, if not all of my old crop, corn and soybeans, both spoken for.
Christopher, how about you? What did you get for questions on the livestock side?
Yeah, on the livestock side of things, most of the questions this year centered around cattle markets, in part because those have just been a little more dynamic this year and looking to be that way going forward. On the feedlot side of things, the questions centered around, are we turning a corner? For the last year, two, perhaps three, depending on what your operation looks like, things have been pretty good in the feedlot space here in the United States. People were wondering, is that going to come to an end? Are these margins that we've been seeing going to get squeezed out, mostly by high input prices? On the cow-calf side of things, those folks are having their moment right now. They are coming off of what have been 2 good years of returns. And the question that they're asking is, when will the herd rebuild begin? Which is another way of asking, when will their margins turn a corner and start to narrow going forward? It's looking like here in 2025, they're going to have another good year, and perhaps even on into 2026. For hogs and pigs, the hog producers in attendance this year didn't seem to have as many questions this year, in part because things are a lot better than they were even 12 months ago. So what seems to be on their mind is healing from what they've just gone through. And, the bleeding has certainly slowed down, but I'm not sure it has stopped yet for everybody. So they were there, they were asking good questions, but they didn't have the sort of pressing questions that they had 12 months ago. And I think that is a sign of the industry doing better overall.
Now, one of the things hanging over the markets as we speak is the threat of tariffs. The situation is incredibly fluid. It seems to be changing by the day, if not the hour. But in a broad sense, Christopher, what impact are tariffs, or even the threat of tariffs and the potential retaliation by trading partners, having on the markets?
The tariff situation is really murky right now, and there are a lot of moving pieces, and those pieces are moving very quickly. Zooming out just a bit for a moment, exports are really important for the ag economies that we produce here in the state of Iowa: corn, soybeans, pork, beef. For example, U.S. pork production, 30% of it was exported in 2024, and 14% of U.S. beef production was also exported in 2024. And therein lies the reason why agriculture gets so uncomfortable anytime that tariffs are highlighted in the news, because these ag products, specifically the ones I just mentioned, but also others, are common targets for retaliatory tariffs, because our trading partners know just how important exports are to agricultural producers here in the state. Regarding impacts, it's way too soon to know what the impacts will be. I mean, it wasn't until the first week of March that we went from having potential retaliatory tariffs to actual retaliatory tariffs on ag commodities. What we have seen recently is big price swings in livestock futures markets. The last few days in February and then going on into the first week of March, livestock futures, both hogs and cattle, collapsed at the end of February as the tariff deadline loomed. There was a really steep decline in both live cattle futures and lean hog futures. But then when the USMCA exemption was announced, they bounced back up off the bottom because that exemption included products like beef and pork. So a lot of big swings up and down.
Zach, pivoting back to the crop side for a minute. We're sitting here mid-March. Another planting season is just around the corner. Right now, at its Outlook Forum, the USDA forecast a fairly sizable increase in corn acres and fewer soybean acres. Based on the situation as of today, do you think that holds, or could it swing back the other way, or what are some of the factors that might play on that acreage decision?
Yeah, I haven't plugged the numbers in a little over a month, but the last time I did, it was just aggressively more profitable. I mean, you could actually have a profit versus the Iowa State projected costs for 2025 here from corn. You were going to make money, but from soybeans, you were still significantly in the red. And so that's really what's driven some of that mindset from the USDA. It's important to know that that forum took place on the 27th of February. That's not based on farmer surveys. That work's being done right now. And those survey results will be in the updated, quote unquote, more official numbers that come out on March 31st during the prospective plantings, as well as the quarterly grain stocks that we'll see. To answer your question, though, I believe that they currently have it pegged to corn 94 million acres, which would be a 3.4 million acre increase, and soybeans at 84 million, which would be a 3.1 million acre decrease. So definitely seeing that switch. The USDA is currently projecting that. And that's based off a corn to soybean ratio at 2.24, which anything below 2.5 favors corn. And so we're significantly leaning more towards those corn acres. Obviously, you've had maybe some seed purchases, or you've done some field work or some fertilizer work that's already made some of those decisions for you. But any of those acres that are still up in the air where producers can rather easily switch over, they're looking at the math. We're not in a situation right now where you can afford to be leaving money on the table in the ag economy. So those decisions are getting more heavily scrutinized than they have in years past, and will continue to be. And yeah, I wouldn't be surprised to see those numbers come into fruition, and maybe even a few more acres move towards corn as we get a little closer here to planting season.
Anecdotally, there was a member who attended one of the meetings in our series who came up to me afterward and said, I had a field, I think it was like a 75 acre parcel that he planted his corn last year. And he said, after hearing you folks talk today, I'm pretty sure I'm going to plant corn again. I had considered planting soybeans, but the outlook just looks so much better for corn. So I think you get enough of those folks making that same sort of decision, you do get that swing toward corn, like Zach said.
Yeah, when you look at the balance sheets for corn and soybeans, you've got Brazil coming off a record soybean crop. You've got Argentina, who earlier we heard all the concerns that around the dryness there, and they did. They took the top off yields, but still a very successful production year from Argentina. And South America in general from their soybean crop this year is at a record. And so you've got this really, unfortunately, bloated both domestic and global balance sheet when it comes to the soybean perspective. And then, as I mentioned earlier, that on the flip side, you've got the corn balance sheet, which has tightened significantly, both on the global and domestic side. And so corn really has a story, and soybeans, it's a much harder outlook for me to see how we get that significant rally, just because we've got so much supply, both domestically and globally, and also just these continued demand questions around guidance around 45Z and biofuels and what all that kind of looks like. And then also I mentioned how strong our corn exports had been, how strong that demand had been, running 8% ahead. On the soybean side, on inspections, we're only 1% ahead of the current USDA projection, and that number's been dwindling. And so as you think about the South American bushels that are hitting the market right now, China's buying from Brazil and Argentinian beans in place of that U.S. bushel. This is the time of year where our soybean exports really dry up, and we're seeing that. And so just some more concern around demand there. So really, just as you think going forward wise, corn has a bit of a story right now, and we really need to see some more demand or some supply concerns from the soybean side as we move forward.
Yes, Christopher mentioned earlier, risk management is really going to be a tool that'll be important for farmers. Crop insurance deadline has just passed. We'd remind folks that sign up for Farm Bill programs, ARC and PLC, is April 15th. So they need to confirm their enrollments in those programs. And that could be something that comes into play this year that hasn't come into the past. You mentioned we could be in a weather market after this, depending on, do we get the crop planted? Do we not get the crop planted? And then we get into that June timeframe you mentioned earlier that really will have an impact and kind of something farmers will be looking at.
As you go forward from here, we're in this really cruddy spot market-wise where we just had a pretty significant sell-off after some pretty good strength. In my opinion, that March 31st date is going to be pretty important. It's going to give the market a lot of definition and kind of set the tone probably for where we're headed as we get into the field. And then, from there it switches over to a weather market. We've had some pretty significant precipitation events here over the past couple weeks, and the U.S. Drought Monitor for the Corn Belt's been looking better due to that. Hopefully we can continue to get those moisture levels where we want them as we head into planting, but also don't delay us too much. But that's where you need to be keeping your eye on in that April, May, June timeframe. If you get sustained rallies there, especially depending on if you've been a little slow to the trigger and getting some sales on, wouldn't hesitate too much or get too greedy when it comes to taking advantage of rallies. It's only a rally if you take advantage of it.
Christopher, there's plenty going on in the livestock markets as well. Cattle herd numbers are the lowest in 50 to 60 years. What's your take on the outlook for cattle? And just roll right into hogs.
Like you indicated, the United States currently has the fewest cattle and calves running around since 1961. And that is because we are firmly stuck in the bottom of a cattle cycle trough right now, waiting on that rebuild to start. The soonest that folks are expecting that rebuild to start at this point is 2026. There are multiple indicators of that. The percentage of cattle on feed that are heifers. You look at WASDE's beef production estimates. There's just a lot pointing to 2026 being the first year that rebuild could start at this point. So the supply situation for cattle is pretty well baked into the cake. You can't have feeder cattle spring up out of the ground. They have to come from somewhere, and that takes some time. The demand side is where things get a little more interesting. Some retail scanner data from Circana in 2024 tells us that despite higher prices in 2024, beef continues to perform very well at retail. Total dollar sales were up 10% in 2024 versus 2023. And that is an astounding figure. Beef has firmly solidified itself as something that the American consumer wants to buy when they go to the grocery store. So I think you will continue to see high live cattle prices, both on futures and in cash, through this year. The question is, for feedlot folks, how much margin is there going to be left over by the time you account for higher prices for the feeder cattle? And, if we do get some sort of weather market situation with corn, that other primary input, is there going to be any margin left over for the cattle feeders? Now, cow-calf folks, as long as they get some okay grass this year, there's so much money to be made in that market right now. USDA is estimating over $700 return per cow in 2025. That is an astounding figure. If you have cows, there is certainly money in that market segment right now. Buying heifers or buying bred heifers is a very expensive thing to do right now as well. So is that enough return to generate a rebuild this year? Probably not, right? That is why folks are thinking 2026 is the first year that could start. Pivoting to hogs, the situation with hogs is we're in a healing season, right? In 2023, according to Iowa State University's estimated returns model for farrow to finish, the average return in 2023 was a loss of $24.10 a head. In 2024, that was better. It was an estimated positive return of $4.70 a head. Here to start off 2025, just the January number is in the books, and it was $2.67 a head. That's not something to really brag about at the coffee shop, but that is better than losing close to $25 a head. And so I think that going forward, the question is, does that slightly positive return maintain through the year? I suppose it could take off, perhaps if we end up with some really strong export numbers, or if we end up with some supply issues. There's been some rumors of some supply issues, perhaps through this spring, related to disease. But another concern is, does that flip negative again? In 2024, we saw that domestic demand was actually down a percentage point year over year from 2023, according to LMIC's pork demand index. So pork demand has not been as strong recently as some folks have hoped. So I think the situation with pork, both the supply and the demand kind of have question marks around them right now, whereas those are more solidified on the beef side.
One of the things that's interesting for me, if you don't mind me chiming in just real quick on the beef thing has really been driven by the supply side, in my opinion, but supported by this just astounding amount of demand. I mean, you've got these rising prices, you've got lower inventories, and folks have been buying it. And so I'm just wondering, when you think about when's that cycle going to shift? For me, it's kind of started to become more of it's going to be a demand side shift perhaps that kind of starts that trend back the other way, more so than somebody's just going to decide to start keeping more heifers at these higher prices. As long as you have these higher prices, you're going to continue to struggle to retain heifers, I think. And so how do you change that? You get the price to a point where consumers slow down purchasing, and then the demand cycle corrects itself that way. And so looking at the markets right now, the broader markets, ever since the end of February, when corn and soybeans started selling off, everything pretty much started selling off. And, equities are down significantly. And so I think that the retail consumer, especially the higher end retail consumer that's buying those beef cuts, has, really been participating in that outside market strength that we've had over the past 2 years. And now if we are in some sort of sustained downturn or even recession, I think the end-use consumer is going to be a little more concerned about, am I going to buy chicken, pork, or beef? Or am I going to quit buying T-bones and start buying ground beef? Or what does that look like? And I think that probably has a pretty significant effect on, that cattle cycle and might be the trigger in terms of seeing that correction start to happen as we move forward.
Yeah, that product substitution at the retail level can have a huge impact. Christopher, we talked about risk management on the crop side. What about on the livestock side? What can or should livestock farmers be thinking about to manage their risk?
For both feedlot folks and cow-calf folks, and actually swine folks as well, livestock revenue protection, LRP, ends up being a very attractive option in a market like this. There's some details that folks can look up in some webinars that Iowa Farm Bureau has done, but it essentially is a subsidized put option where you pick your coverage price, it comes with a premium, you lock that in, but then you have the ability to capture the upside if things do, make a run up later this spring and into the summer. So I think that LRP product is something that folks should definitely take a look at. I was talking with a Farm Bureau member who said that he just used LRP for the first time this spring. Zach, I think, just used LRP for the first time this spring. He can chime in here as well. Great product. I think that is certainly should be, if you have your toolbox of risk management tools, LRP should be that first tool that you reach for and at least consider using this spring and summer.
Yeah, we've got a decent cow-calf herd, my dad and brothers and I, and this winter, we actually took advantage. There's an unborn calf option, so our calves were due for another, 3 weeks at the time or something like that. We're in the middle of calving season right now. Prices were at all-time highs, and they've continued to rally. But, it's one of those things where you lock it in, and your hope is that you don't have to utilize it. But to sit there and put a base of $260+ per hundredweight on unborn calves up to 600 pounds in December or early January feels pretty good for an animal that you're going to take to the market sometime between September and November later that year. So, we took advantage of that, and I'd highly recommend it. It's definitely worth the time. And to be honest, it's pretty simple. Sit down, meet with your agent, and have a discussion, and before you know it, you're ready to go.
Guys, this has been a great conversation. It's the kind of thing I hear you guys talking about at the office quite often, the interplay that goes on between you folks. And Zach, what educational tools does Farm Bureau offer where members can get the access to the kind of things you guys talk about online through our offerings on the website?
Yeah, IowaFarmBureau.com's got a lot of resources, so I would definitely point you there first and foremost to go check those out. One of those resources is our webinars and our upcoming as well as our past webinar recordings, and so you can go find those, but just a lot of educational information out there. One of our most recent webinars was with Holly Cook from the National Pork Producers Council, and she did an economic outlook on the pork industry for 2025. Mentioning LRP, we actually have a LRP webinar utilizing Livestock Risk Protection coming up here on Tuesday, April 1st. So again, go to IowaFarmBureau.com, check that out and get registered for that. But there's a ton of resources. I just encourage you to take 10, 15 minutes and trudge through some of those and see what all is out there. You'd be surprised what you can find.
As you heard, Zach and Christopher have lots of useful crop and livestock insights for Iowa farmers to consider as they make decisions for their farms throughout 2025. We'll echo Zach's recommendation to check out the educational webinars and other resources on our website, including a tool that allows farmers to search for the best cash bids for corn and soybeans near them. Zach also alluded to Iowa Farm Bureau's upcoming webinar on livestock risk protection coverage on April 1st. You can find that webinar and register now by clicking the link we've provided down in the notes for this podcast episode after you're done listening here. Now let's look a bit further into the future with ag futurist and swine consultant Todd Thurman. Todd was in Des Moines for the Iowa Pork Congress earlier this year, and that's where he caught up with Spokesman editor Tom Block.
Todd, to start off with, you have an interesting and diverse background that's given you some firsthand insight into the topics we're going to discuss, having lived and worked extensively overseas. So first of all, tell us about your background and how it's shaped your perspective on global agriculture.
I tell people a lot of times when I talk about my career that I've built my career doing things nobody else wanted to do in places nobody else wanted to go. So I grew up in the Texas Panhandle, and I grew up what I like to call ag adjacent. Judged livestock in junior college at Clarendon College, and then went to Texas Tech. I worked at the swine research farm there, and then went to work for Cargill and was there for 15 years. The first half with Cargill Pork, which is now JBS, and then the second half was with Cargill Animal Nutrition. And that's when I ended up doing a lot of international stuff. I took an assignment and moved to Russia for 2 years. I started up a 25,000 sow farrow to finish system there. Spent a lot of time in Latin America and Asia. And then about 8 years ago, I started my own consulting business. So Swine Insights International. So we're a team of 5 consultants that work closely together. And then we've got a broader network that we call upon. About 80% of our business is international. And a big chunk of that is in Asia, but we do a fair amount here in North America as well.
Let's talk a little bit about that China relationship and focus a little bit on the here and now first, and then we'll get into maybe some of these larger demographic trends. But China and Brazil have really signed dozens of trade agreements. How concerned do you think U.S. ag producers should be about the continued development of that Chinese and Brazilian relationship?
Well, the Brazilian relationship from a China perspective is a lot more politically palatable. Everybody's kind of anticipating trade war 2.0 and wondering what that might look like. And so there's certainly a lot of concern on the Chinese side from that perspective. And then just the fact that we, are quite clearly, at least ideologically, are adversaries. And that's an uncomfortable position to have a dependent trade relationship on an ideological adversary. And so I think Brazil represents a very good alternative in a lot of these areas where China is very dependent from a food standpoint. From our perspective, I think one of the things I've been encouraging the industry here in the U.S. to do is take the Brazilians seriously. I think there's a lot of dismissiveness around, how competitive Brazil is going to be. There's some questions about some of the numbers that come out of Brazil, and I certainly share some of those questions. But I've spent some time there recently. They have some challenges like everybody else does, but they're in a good position. They're very competitive. And I think the thing that worries me the most about our competitive position is the amount of youth and energy that they have in agriculture. I mean, in Brazil, agriculture is the cool thing to do, right? The brightest students want to go into agriculture, and everybody's kind of competing for that. And so it's just, there's a lot of energy, there's a lot of motivation, there's a lot of good advantages. Again, all of the disadvantages that people talk about, they're all true, but they've made a lot of progress, and I expect them to continue to make progress.
So in light of those advantages and increases that we've seen in that South American soybean production, which has impacted U.S. export demand, what can Iowa farmers and U.S. farmers do domestically to help offset those losses in export demand?
Yeah, I think with some of the demographic work that we've been doing and trying to project global demand, I think this is somewhat generic advice that certainly applies to grain producers. And that is to really think about in the near to medium term, diversifying the markets. There's going to be some short and medium term opportunities within that Latin American and Southeast Asian market, demographically speaking. I think we're going to lose some opportunity in East Asia and maybe some in Europe as well. Temporarily, I think there's going to be some opportunity in Southeast Asia and Latin America that are worth developing. And then as we think about the longer term horizon, we really got to try to figure out Africa and the Middle East, because that is the only place in the world where I think we can anticipate long-term growth, significant growth in demand. And those are challenging places. They've always been challenging places. That's probably not going to change. And we don't really have much of a foothold. If you look at our ag exports, less than 6% of our ag exports overall go to those countries that are the fastest growing in the world. And so we really need to, I think, up our game and beginning to establish those relationships from a long-term perspective. Those are probably the keys. And then I think just, remaining competitive and, becoming increasingly efficient, those things that we're already good at. We definitely need to keep doing that. And then I think this North American relationship is really key. I think this North American trade bloc is a very strong position for all three countries. And I certainly hope we're able to keep that together and, if anything, strengthen that relationship.
Let's dig a little bit into your experience and insights into China. They are by far the largest global importer of soybeans, also very important to Iowa pork producers. Given their current economic challenges and their population outlook, what do you anticipate for their future demand as it comes to agriculture commodities?
I spend a lot of time, and I kind of stumbled onto this area of study by accident, but I've been looking a lot at the demographic trends, and really they're not particularly favorable overall for food and agriculture producers. And I think China's a really good example of that. I think the industry to some degree has some blinders on when it comes to China and how significant their challenges are. We're hearing a lot about their economic challenges, and those are certainly significant, even beyond the demographic challenges that they're dealing with. But they're in the middle of what I can only categorize as a population collapse. Even the conservative estimates, I think overly conservative estimates out of the UN, say they're going to have something around a 50% population decline between now and 2100. And I know that sounds like a long time, but that's also a massive reduction in population. And there are reasonable scenarios out there that show potential reduction of close to 70% over that same time period. I think there's also reason to believe that it might happen faster than what people are projecting. China's already declining in population. In the last 2 years alone, they've lost 3 million. We haven't gotten new numbers yet for 2024, but we're already in the middle stages of a population collapse there. And so that's going to be a real challenge. And I think in a lot of these commodities, China's going to have a really legitimate chance, probably not for the reasons they hoped, to achieve self-sufficiency because their productivity is increasing at a respectable clip in a lot of these commodities. And their population is aging and declining. That makes it easier to match demand when demand is declining. So we're starting to see that. So for pork, we're starting to ring the bell. We think based on the trends that we're seeing, we have 30 clients in China that are pork producers. And so we've got a pretty good sample size of what's going on. I know everybody has a hard time believing numbers that come out of China, and I certainly understand that hesitancy and share that hesitancy. But we think there's a possibility that China could become self-sufficient in pork in maybe the early 2030s based on recent trends that we've seen. And so my advice to anybody that's looking for China as a solution to your oversupply problems, if you want to look at it that way, I think you need to look elsewhere because they've been a really good, important trading partner for us for quite some time. And even self-sufficiency in pork doesn't mean they don't import anything, obviously. They'll be important from a carcass utilization standpoint and some of that kind of stuff. But I think the days where we can rely on China to just offload all of this oversupply that we have are probably gone and certainly going to be gone soon if they're not already. So definitely need to be looking elsewhere. The good news is there's plenty of places to look, but that's going to be a harder sell. And that requires a lot of building of relationships, and those things don't just happen overnight. And so a lot of this advice that I'm trying to give the industry is really about, hey, this stuff's not changing overnight. The world's not ending. The sky's not falling. But these are going to be big adjustments, and they don't happen quickly or easily. So the earlier we can kind of start anticipating these changes, making these adjustments, the less painful this transition is going to be.
One thing you've noted happened in China as people move into the middle class, increasing demand for protein in their diets. Will we see that in some of these other emerging markets like you talk about in Southeast Asia and Africa?
Yeah, it's probably a couple of $1 trillion question. We've traditionally seen that. That's a familiar story for anybody in animal protein. As these drivers that we've talked about that have become so ingrained in our culture, we make these assumptions without even realizing we're making the assumptions, right? and that's that the population is going to continue to grow at a rapid clip, that economic resources are going to continue to expand at a rapid clip, and that we're going to have increasing globalization. Those are kind of the three factors that contributed to this explosion in demand. That's the environment that we all think is normal, right? Everybody in our industry, for the last 50 to 100 years, that's the environment we've lived in. So to us, that's normal. But historically, it's not normal at all. And it's beginning to change. It's already changed to a significant degree. It's going to continue to change. And so, as we think about, what does that mean for demand? There's a lot of unanswered questions, right? There's a lot of unknowns there. In my speaking engagements, when I talk about these demographic shifts, I don't have all the answers. I may not have any of the answers, right? I'm really there because I think I have some important questions that I want the industry to engage with, because I think it's really important. We just don't know what all that means, right? What does it look like? What does economic growth look like in a declining population environment? We've had experiences in the past where we had declining populations in certain regions, but those were for external circumstances, right? Those were wars and famines, and those were all terribly tragic things. But once those external factors were removed, things sort of went back to normal. This is a structural decline. This is based not on external factors, but we're making a decision as a human species to reproduce at a lower rate, right? And that doesn't seem to be changing anytime soon. And frankly, even if it does change, we're going to experience a major shift that we've never seen before it could even recover, even if we did have a dramatic shift in fertility rates. So we could talk for 6 hours about what that means, because there's just a lot of unanswered questions. But I'm really trying to get the message out just to say, look, we can't continue to assume that demand is going to continue to increase like it has in the past. And in the past, when you had that underlying growth in demand, if you got out a little, over your skis, or you get a little ahead of yourself, it wasn't that big a deal, because, things will kind of catch up. In an environment where that is growing at a much slower rate, or even when population is declining, you don't have that cushion. And so I think we're going to have to rethink really all of our institutions, all of our tools, all of our strategies, all of our incentive structures have all been kind of built, whether we realize it or not, on these underlying assumptions that are not going to be true for much longer.
Yeah. So what does that mean for an Iowa farmer? Short term, long term? What should people be preparing for now in the next year, 5 years, and also for their kids who might be looking to continue farming?
Yeah, I think the good news is that people have always got to eat. We always fall back on that, and I think that's for good reason. There's going to be a lot of opportunity for agriculture, especially for production agriculture. My advice for them would be, first of all, continue what you're doing, continue to improve efficiency, continue to manage costs. All those things have been important and are going to continue to be important. And I'm certainly not suggesting losing focus on any of that. I think long term, the fundamental question that has to be answered is, how do we make a shift from a quantity focus to a quality focus? And what does that mean? And so it's easy for me to say that. The real challenge is, how do you define quality, and can you get a premium, right? Can you get a premium for that quality? Because ultimately, where we're headed is, I believe, overall lower demand. And so if we want to maintain profitability, we're going to have to find a way to increase that premium that we're making, increase those margins, and substitute quality for quantity. And I think that means something different for every commodity. And it's something that every commodity group is going to have to kind of define on their own. But I think that fundamental shift is what I would be thinking about. So I would give the same advice to a corn producer as I would to a pork producer or a beef producer. Be thinking about, what does that look like? How do you make that shift from quantity to quality? If you're producing the same amount or even less, and you want to make the same amount or even more money, what could that possibly look like? And I think that'll give you a hint and help push you down the right direction.
Yeah, very interesting. And on the protein side, talk about consumer demand. And what are you seeing during COVID? There was a big pullback. Obviously, we couldn't go to restaurants. Is that demand coming back at the restaurant level? And what are consumers today looking for?
It's been remarkably robust. I've been on the calls with several investor groups, and we, and I think most of them, continue to be kind of amazed at the resiliency of that food away from home spending here in the U.S. And so that's obviously great news. How long is that going to be able to keep up? I don't know. I think we've got some economic headwinds ahead of us that may put some pressure on that. In other parts of the world, we're not seeing that so much. And I think what we're seeing is the beginning of some different consumption patterns around age cohorts. So we're seeing what appears to be potentially lower animal protein consumption in younger people. And so that's a concern for folks in the protein space. Another one we see is as the population ages, and we don't see a lot of talk about this, but as the population ages, we see obviously a lower requirements for caloric intake for most of the nutrients. But we also see a tendency for people to underconsume even versus those recommendations. And we see that particularly in protein. And so I think one of the things from a protein perspective we really need to be focused on is, I think from a health perspective, I think we need to really focus on increasing that protein intake in older folks. And I think meat is going to have to be a big part of that. I think there's a ton of potential there. And I think we're not doing a great job of tapping into that and engaging that potential market. And then certainly we need to be, focused on younger people. But the reality is the way these demographics are shifting, there's fewer of those younger people than there have been in the past. And in a lot of ways, they have less resources than they have in the past. Certainly not suggesting we don't focus on trying to maintain or even increase protein consumption among those folks, but let's certainly not ignore the potential in the older age cohorts that are growing faster. I mean, I talk a lot about my grandmother's going to be 90 next year, and she's part of the fastest growing demographic in the world, and almost nothing gets marketed to her, certainly not food. And so, you really need to be thinking about that. There's a big potential market there that I think we're underappreciating, and I'd really like to see us focus more on that. One of the most common chronic conditions at older ages is called sarcopenia, which is a medical term for muscle loss. And we think it's heavily related to a lack of sufficient protein consumption. But it represents a real, potential. So if you look at some of the recommendations from folks on the human nutrition side, there's some people out there that are saying, hey, I think our recommendations for protein intake for people over 65 are way too low. Maybe they need to be double what they are. And people aren't even meeting the current recommendations, right? And so that creates, obviously, an enormous opportunity that I think we're doing a really poor job of exploring and trying to capture. So I'd certainly like to see whether it's the beef, the chicken, the pork, or anybody else in the animal protein sector, I think should be paying more attention to that than they are.
Very interesting stuff, Todd. Just to wrap up here, let's talk about the here and now again for hog producers. It's been challenging. We saw some record losses in the past year or two. What's your outlook for this year?
We tend to be focused a little more on the longer term. I think this year probably looks fairly good. We came off in 2023, the worst year we've had in history. But I think that opened up a lot of people's eyes. What we're really trying to encourage people to think about is, what does this look like in the long term? Unfortunately, a lot of these longer term trends that I've been talking about are particularly unfavorable for pork. One of the things I talk about to pork producers is, if you look at the top 20 pork consuming countries in the world right now, 11 of those 20 countries are already declining in population. Where these trends are happening are very unfavorable for us. So a lot of those are in Europe and in East Asia. So have been really important markets for us from an export perspective on the pork side. And then you look at the other side and you say, okay, well, what are the 50 fastest growing countries in the world? And you start looking at that, there's a ton of potential there. And really, all of these discussions end up eventually coming back to, is Africa going to come through with the demand that, obviously the potential's there, everybody sees that, but whether that actually materializes or not is kind of the $1 trillion question, I guess. I think I'm encouraging the pork industry to really be thinking, what does this look like long term? How do we make sure we're right-sizing this industry? If you're still left in this industry at this point, you're an optimist by default, right? We're really kind of going through some cycles here that I think long-term are pretty challenging. And I don't think our current systems have great answers for. So I would encourage and have encouraged the pork industry to be thinking about, not just the short term. I think we do that pretty well. The next 12 to 18 months in agriculture, we're pretty good at that. The longer term, we're not so great at it. I think we've got some real challenges. And the earlier we make those adjustments, the easier the transition will be. But we certainly have a human tendency on those types of issues to wait until it's too late, and then we have to make changes, and then those tend to be a lot more painful.
Yeah, things that are working now, let's just keep doing it. But one thing, agriculture's never stood still. There's been a lot of changes. You talk about your grandmother and the changes people that age have seen over time. And so who knows what kind of changes we'll see in the next 10, 20, 30 years. We could go on forever talking about AI and things like that, but certainly still an exciting time.
Yeah, I was telling somebody earlier, I spent the last 2 days talking about AI and, asking about, what are young people going to do in the future? What advice would you give for an 18-year-old that's going to college? Man, those have always been kind of challenging questions to answer, but there's never been a time where those were more challenging to answer. And so, yeah, there's a lot of uncertainty in the industry. Some of my conversations, some of our presentations can get a little negative, can get a little dark, and I always try to end them up with some optimism. And really my optimism is based on people. We have some of the best people in the world and very tough, resilient, creative, innovative people. And I have no question that we're going to be successful in making this transition. We're going to make it. We're going to survive. We're going to get through it. But I think it's going to be a challenge, and I think we can make it easier on ourselves if we try to get out ahead of this instead of letting it happen to us and being more reactive. If we could be more proactive, I think it would help a lot.
In today's fast-changing world, it's hard to predict too far ahead, but I think Todd pointed us to some global shifts that we should definitely keep our eyes on as we plan into the future. If you'd like to hear more from Todd, we've linked to an hour-long webinar we recorded with him back in January. You can listen to that recording by clicking the link in the notes for this podcast episode. While you're down in the notes, you'll also see a link to register for the upcoming educational webinar on livestock risk protection coverage, which will be held on April 1st, as well as links to some facts, infographics, and videos you can use to help you share your farm story during Agriculture Week here in Iowa. Ag Week is a great opportunity to share how farm families provide for our needs while caring for their animals and the environment sustainably. No one tells that story better than farmers and agriculturalists like you, and we're happy to provide some information that helps you add even more value to that important personal story. That's all for this edition of the Spokesman Speaks podcast. We hope you found it insightful and that you'll join us for our next podcast episode on March 31st. Thank you for doing the work that inspires everything we do here at the Iowa Farm Bureau, and thanks for listening to the Spokesman Speaks.
Thank you for listening to the Spokesman Speaks, a podcast by Iowa Farm Bureau. Check out more podcast episodes at iowafarmbureau.com/podcast. You can also find and subscribe to the Spokesman Speaks podcast in the Apple Podcasts app, Google Podcasts, Spotify, iHeartRadio, and other popular podcast apps. We appreciate your ratings and reviews, and we welcome you to email us your feedback at podcast@ifbf.org.